Hey guys, it's Andrew Keene from KeeneOnTheMarket.com. This is your Emini Oil, Euro, and Unusual Option Activity Report for July 2nd, 2012. Today was slow. Sometimes the best trade is no trade, and I think that's what it was. If you look at the daily chart in the minis, we actually have a buy signal here. Buy signal on the close of the bar on Friday at 13.56 half. I would have to risk down to about 13.25. Hopefully getting up to about 14.10 would be the target to the upside, where we had a high back in May, 14.1175. So is this a good trade? It might be a bull trap, maybe jumping on board this a little too early. Today, a doji, very, very quiet day. We had a very, very tight range today. Let's look at the 5-minute bar. And this felt like the 3rd of July. Very, very quiet day. We opened up this morning at 13.59. We got the high within the first hour, 13.61. Sold off, just overlapping bars, nothing to really write about. Let's look at the euro real quick. And I continue to be short the euro. I have taken off some pieces of the euro, not too much. And I like to look at the euro on the 240, as everybody knows. And I like to look at the 24-hour session. So in the euro, could be a possible, and, do we get a trap here as well? 127. We've seen some selling pressure at this 127 level many times. I think the euro will continue to go lower. The euro looked very weak even though the market was up today. So the euro did look weak today. I think that we will get a little bit of selling pressure. I think we test down back to this 124.40, maybe even to 122.80, and eventually I think we hit 120. This is more, of a position than a trade. I am short the euro. Look at oil. Huge move on oil. I think it's the biggest move. I don't know how long, but it was a huge move on oil. It was up about $7.50. I was talking about trying to get short around this 85 range. Risking to probably 88. So risking 3 to make 3. And today it would test it down to 682.10. So that would have been a good trade if I sold the close of the bar on Friday. I would have a gap risk or overnight risk or weekend risk, but it would have been a good trade. Let's look at it on the 5-minute as well. Kind of quiet day, not much action. We got down to this 82.10. Buyers came in about $1.70 range, which is pretty much in line with oil. I would say it's a little bit on the higher end. It's the average range in oil is around $1.20-ish, $1.40. One trade I saw that I flagged in the live trading room was MW. Huge buyers of puts, and I always talk about it. Just because puts are being bought doesn't mean a bearish position. This could be a disguise, someone disguising their position because they really want to get long. Then they won't get investigated by the SEC. They get, I lost money on my puts at least. So a customer came in and bought August 31, 32, and 33 puts when the stock was trading around 33.07. Stock get a little pop, about 20 cents. I think this is against a long stock position. I flagged this in the live trading room and on the videos. Last week, STZ, we saw puts being bought days and days and days in a row. July 20 puts, 45 cents. If I would have bought straddles, which I didn't, I would have made a killing. Just because puts are being bought doesn't mean it's a bearish position. Just because calls are being bought doesn't mean it's a bullish position. Huge gap higher, STZ up to $29 now. So I think the at-the-money straddle, the 20 straddle, I could have purchased for around $3. Well, the thing's $9 now, so that would have been good for a triple. STZ. One more I wanted to look at was MMR. Paper bought 14,700 July 10 puts, July 15 call strangles for 44 cents when the stock was trading 13.04. What does this mean? That means the customer thinks the stock is going to move between now and July. He bought this for a debit. He paid money for the spread, 44 cents. It did go up in value as the stock rose. So this customer is buying what's called strangles, out of the money puts, out of the money calls. This is Andrew Keene from KeeneOnTheMarket.com. We'll run it back tomorrow. Only have a half day. And we do have our first premium webinar. It's going to be on July 8th. If you want to subscribe, you can email sales@KeeneOnTheMarket.com. It's earnings webinar. I'll give 5 real-time, real dollar of value examples in JP Morgan, YUM, Alcoa, Marriott, and more. So I'll give 5 real examples of how I'm trading them, how I use implied volatility versus historical. I trade earnings very well. If you follow me in the live trading room or on Twitter or YouTube, you should know that my earnings are usually my specialty. I wish every day was an earnings trade. So make sure you guys get into the webinar. If you guys get into the webinar, you will be able to get access to it. You will be able to watch the recording whenever you want. If you think I talk a little fast, if you need to listen to it again, you will be able to do that. You can email sales@KeeneOnTheMarket.com. Have a great night, guys, and I will see you tomorrow.